Hey, it's episode 41 of Money Hacks. This is Alex. It's springtime, and it's the time of year that a lot of people or households or families start looking to buy a house or buy a townhouse or condo. And the real estate market's heating up, certainly in this area, as well as a number of different areas across the country. And so because we have this conversation with a lot of employees and investors, we wanted to do a quick video on the true cost of homeownership. Now, I would say please go out and talk to real estate agents and mortgage professionals and get all the information you can as you start to embark on a journey to own a home. But here are a few things to keep in mind. So first of all, I think nearly everybody understands that when you're going to buy a property, you want to have a down payment. And that can be anywhere from 5 up to 20% of the value of that property. The rule of thumb, and of course what we would recommend, is being able to have 20% as a down payment at least, if not more. But along with the down payment, when you go to buy the house, there are a number of other additional expenses, fees, taxes, and so on that you'll pay up front, typically called closing costs. And this can be everything from the appraisal, home inspection, your title insurance, local, county, and state taxes, depending upon where you live, and other sorts of expenses that are tied into the mortgage loan product that you have might also be included there. And that can that total closing cost amount can sometimes be as much as or more than your down payment, again, depending on all those factors. So you want to be thinking about that and saving for that amount in addition to the down payment you're going to take to purchase your property. Now, once you've purchased the house and you've signed all the paperwork and you're getting ready to move in, of course you know about your mortgage, but that also includes the mortgage payment, principal and interest, as well as insurance on the property and taxes, all usually built in to that monthly payment. So you should be thinking about that as well when you're projecting out the type of house that you can afford and the value or the cost on a monthly basis for that property. Now, once you're in the house, that's where maintaining the home becomes what could be an unexpected expense for many, and why we are big advocates of emergency savings. And so there are big home expenses that happen sometimes, like repairing a roof or replacing an HVAC unit, and of course you should be thinking about and saving in an emergency account for those. But even little things like servicing your HVAC, or getting it ready if you had to do some work on the property to move in. If you're buying a house, ensuring that you're maintaining the yard and landscaping and the costs that may be associated with things like pruning trees or having trees removed off your property to mitigate certain risks that you might have. So there are a lot of additional costs that you should be planning for or thinking about, so that when you get into your house, you can still be financially successful while enjoying the home that you have and also enjoying your life in other areas too. So I hope this video helps. Check out more on MoneyNav, and we'll see you soon.